The Canadian Imperial Bank of Commerce, that is CIBC, has reported an impressive surge in its fourth quarter profits, marking a significant improvement from the previous year. The bank's performance for the quarter ending October 31, 2024, revealed a net income of $1.88 billion or $1.90 per share, up from $1.49 billion or $1.53 per share in the same quarter last year. This growth reflects stronger profit margins from the bank's loan portfolios and a reduction in provisions for credit losses, both in its Canadian and U.S. retail banking sectors. On an adjusted basis, CIBC's earnings came in at $1.91 per share, surpassing analysts' expectations, which had pegged the figure at $1.79 per share. This earnings performance was largely driven by higher loan margins and a reduction in the provisions for potential loan defaults. The bank also announced a 7-cent increase in its quarterly dividend, bringing it to 97 cents per share, an almost 8% rise from the previous quarter. The results suggest that the economic pressure on Canadian consumers and businesses, due to factors such as inflation and high interest rates, may be starting to ease. As interest rates have begun to decline, CIBC's financials indicate that the worst may be behind, with the potential for a more stable financial environment in the coming year. The bank's provisions for credit losses dropped by 23%, amounting to $419 million, which was notably lower than both last year's figures and analysts' expectations. This decline was particularly evident in CIBC's U.S. commercial loan book, where provisions were significantly reduced. One of the key drivers of CIBC's success was the robust performance in both personal banking and commercial sectors. In Canadian personal and small business banking, profits increased by 17% year over year, reaching $743 million. Despite modest loan growth of just 1%, higher margins and fee revenues played a pivotal role in boosting profitability. Similarly, the bank's U.S. commercial banking and wealth management division saw a notable jump in quarterly profits, which rose by more than 40%, supported by a reduction in credit loss provisions. CIBC's overall revenue grew by 13%, reaching $6.62 billion, driven by strong performance across various sectors. Profit from Canadian commercial banking and wealth management grew by 5%, with loan balances climbing 4%. Capital markets, another major segment for CIBC, saw a 12% increase in profits, reaching $428 million, largely thanks to strong trading revenues and growth in direct financial services. This strong financial performance places CIBC alongside its major peers in Canada's banking sector, including Royal Bank of Canada and National Bank of Canada, both of which also exceeded analysts' earnings expectations this quarter. In contrast, Bank of Nova Scotia reported a miss on earnings, showing the mixed performance across the industry. Looking ahead, CIBC's performance highlights the resilience of Canada's banking sector, especially as inflationary pressures and high interest rates may soon start to taper off. While loan growth remained somewhat muted due to higher borrowing costs, the outlook for 2025 appears more promising, with signs of recovery in both consumer and business segments. Stay subscribed for more videos.